Hey everyone, and welcome to The Explainer. Today we're diving into a massive, practically invisible force that is literally powering your digital life. You know, it's super easy to get distracted by all the flashy consumer brands out there. But as of June 2026, there is an absolute titan hiding right in plain sight, and that's Broadcom. We're going to break down their financials, their super unique growth model, and honestly, why this stock is looking pretty severely undervalued right now. Let's get into it. Okay, to really wrap our heads around Broadcom, we have to start with the sheer scale of this company. $63.9 billion. That's their net revenue for fiscal year 2025. If you're a beginner investor, checking out revenue is step one, right? And a number this massive instantly tells us we aren't looking at some speculative fly-by-night startup. No way. We're looking at a dominant behemoth that is completely woven into the very fabric of the global economy. So, you might be wondering, how exactly do you pull in almost $64 billion in a single year? Well, it definitely isn't from one flashy gadget. Broadcom is actually built on 24 distinct, category-leading divisions. It's like a giant puzzle. They provide the mission-critical infrastructure, the absolute foundation of hardware and software that other major tech companies completely rely on just to survive. From massive data centers to heavy-duty cybersecurity, they've got their hands in literally every vital sector of the digital world. And they definitely didn't just appear out of nowhere. Broadcom's roots actually stretch way back to 1960 with AT&T Bell Laboratories. Throughout the decades, like the founding of LSI Logic in '81, their own core founding in '91, and Avago's IPO in 2007, they have totally mastered the art of strategic growth. They are ultimate builders and buyers. They find these highly profitable tech sectors, buy the absolute best companies in the space, and just integrate them flawlessly. But they don't just buy technology, they build it. In fiscal year 2025 alone, Broadcom poured $11 billion into research and development. That is absolutely massive, and it's the essential fuel keeping them so far ahead of the curve. And what does $11 billion buy you? It generates nearly 18,000 patents. In the investing world, we call that an economic moat. It's this massive competitive advantage that protects their market share, keeps rivals totally locked out, and ensures they're sustainable for the long haul. All right, let's look under the hood. Section 1. The semiconductor engine, powering the hardware. Okay, so Broadcom is at the absolute forefront of the current AI boom. They provide the exact hardware that enterprise data centers are literally desperate for right now. We're talking custom AI processors and hyperfast connections like optical interconnects and PCIe. Basically, AI requires an insane amount of computing power, and it generates a ton of heat. Broadcom steps in and makes these highly efficient chips that can process all that data at lightning speed without, melting the servers down. But their hardware reach goes way, way past the data center. Just think about your own day-to-day life. Broadcom technology is inside the broadband cable modem sitting in your living room. It's the Wi-Fi router keeping you connected. It's the RF filters, the touch controllers, and the wireless tech inside the smartphone you probably have in your pocket right now. They are providing end-to-end connectivity for pretty much every connected device on the planet. Now for the flip side, Section 2, the software ecosystem, securing the digital world. This is where Broadcom goes from being a chipmaker to a totally diversified giant. Their software ecosystem is built specifically for the modern digital-first enterprise. They own some incredible assets in cybersecurity, offering highly scalable protection, detection, and response. They run the mainframe software that keeps the world's biggest banks up and running. And with solutions like VMware Cloud Foundation, they provide cost-efficient private cloud setups and essential ransomware recovery. It's basically all the boring, behind-the-scenes software that the largest companies literally cannot function without. And honestly, here is the sheer genius of this whole business model. You've got this incredible hardware division powering the AI revolution, and it's perfectly balanced by high-margin, sticky, recurring software subscriptions. If hardware sales happen to slow down for a quarter, the software revenue is right there to keep the ship steady. And if software slows down, the hardware boom easily picks up the slack. It is a total masterclass in corporate diversification. Let's get into the financials. Section 3, Financial Health, the numbers that matter, looking at where we stand as of June 2026. Just look at this explosive net revenue growth. Back in fiscal year 2021, they brought in $27.4 billion. By 2023, that grew to $35.8 billion. And in 2025, it absolutely skyrocketed to $63.8 billion. They have literally more than doubled their revenue in just 4 years. For a company of this immense size, a trajectory like that is almost unheard of. It proves for sure that their strategy of buying key software assets and leaning hard into AI networking is paying off in a huge way. But hey, making money doesn't mean much if you aren't actually keeping it, right? Broadcom's non-GAAP gross margin for 2025 was a staggering 78.6%. In plain English, that just means for every dollar of tech they sell, it costs them very little to actually produce it. That is a massive green flag for us. It shows extreme operational efficiency and serious pricing power. And that amazing efficiency translates perfectly into cold, hard cash. Free cash flow went from $13.3 billion in 2021 to a massive $26.9 billion in 2025. Having that kind of massive free cash flow is a foundational metric that any smart investor is looking for. It's the actual cash a business generates after paying for what's needed to maintain its capital assets. It basically proves that this company is a total cash printing machine. So, what do they do with all that cash? Section 4. Rewarding shareholders, growth and dividends. Let's talk about what this means for you, the investor. First, we have to look at core profitability, or adjusted EBITDA. Basically, this is the raw profit from their everyday operations. For fiscal 2025, that hit $43 billion. That is a huge leap from the $16.5 billion they posted back in 2021. This proves their underlying business isn't just growing, but their profitability is actually accelerating. They have all this incredible capital to invest back into the business, buy up new targets, or return directly to their shareholders. Now, one really cool way they've made the stock a lot friendlier for beginner portfolios was their recent 10-for-1 forward stock split, which wrapped up on July 12, 2024. Historically speaking, a stock split is a huge signal of confidence from the management team about where the share price is heading, and practically, it lowers the price of a single share, making it way more accessible for a beginner to start building a position without needing thousands of dollars just to buy into the game. But honestly, here is the real magic if you're a long-term investor: the dividend. Broadcom has this relentless upward trajectory when it comes to dividend payments. Back in FY21, the annual payout was $1.44. By FY25, it had grown to $2.60 a share, and they're even forecasting a payout of 65 cents per quarter by the end of 2026. A rapidly growing dividend like this is super attractive for compounding your portfolio's growth. You are literally getting paid cash every single quarter just to hold the stock, while the stock itself continues to appreciate. Okay, let's wrap this all up and summarize the core investment thesis. Broadcom is incredibly well positioned for the future. They have absolute technology leadership across both semiconductors and infrastructure software. They've built this crazy moat-building IP portfolio, and above all else, they have a deeply sustainable, highly diversified revenue model that is generating mind-blowing amounts of free cash flow. Because Wall Street has been so hyper-focused lately on flashy consumer AI brands, the current market metrics show Broadcom is still significantly undervalued right now. It's a prime opportunity if you're looking to buy and hold. So I'll leave you guys with this. Is it time to add the tech giant hiding in plain sight to your portfolio? When you look at their fundamental financial health, those insane margins, and the dividend growth we talked about today, Broadcom makes an incredibly compelling case for any smart investor. Thanks so much for joining me for this explainer. Keep doing your research, and I'll catch you in the next one.